Pull up back with another video. In today's video, I'm gonna show you how you could have turned $500 into 5,000 in one day. So let's do a complete trade breakdown and let's get straight into it. Step one, what we're gonna do is go to the daily time frame and ask yourself, are we bullish or bearish? And remember, do not look back here to see if we're bullish or bearish. Look at the last breaker structure, and the last clear breaker structure happened. That hasn't happened yet. This hasn't happened yet. The last clear breaker structure was right here. Cool. That's all you need. And again, like I said last time, that is only going to be 20% of your daily bias. The other 80% are going to come from your key levels. So let's get into it. So now that we know our daily level is bullish, we can start looking for our key levels. Now, if we were to buy and we close right here on the last day, meaning that we're probably going to open up somewhere in this general area. If we are going to buy, where is the first area that we could buy from? The first area I'm seeing is the top of this wick, and that's going to be called our pro key level. A pro key level is just a key level going in the pro trend direction of where we think the market is going. And because in this situation we are bullish on the market, our pro key level is going to be a buying area. Next, we're going to find our obstacle. Now, the nearest obstacle I can find will be 50% of this wick. So this is an area where we can expect one or two things. Either we cannot come to our pro key level and we come here overnight, and during the day we actually just sell off, right? You just do this all day. That's an option. Or what could also happen is we visit our pro key level, come to our obstacle. Our obstacle gives us a retracement to get another entry for something, and then we can keep continuing in our pro trend. Or we could not do anything at all. We could come to our pro key level and we just go right past. You never know what's going to happen. You just have to be ready and be available when it hits those levels. Now that we have our obstacles in our pro key level, the next step is to go down to lower time frames to find ranges that make sense with your pro key level. So I go to my 4 hour and I don't see anything too clear. Same thing with the 1 hour. I'm not seeing nothing too clear. Same thing with 30 minute. I'm not seeing anything too clear. The 15 minute clears up a lot more for me. And the 5 minute is honestly better for me. So first thing I'm noticing is we have some liquidity ran out, right? This is our ran out liquidity. And if you don't know about run out liquidity, you always want to see that before considering your range a valid range. If you don't have ran out liquidity, it could just be a normal low. Second, I want to identify my breaker structure. And thirdly, we're going to find that T1. Remember, T1 is just that first pullback. So we ran up here. First on the market really pulled back. So this would be my T1 right above my entry, which is a good sign. When you have your T1 or some type of liquidity right near a key level on your higher time frame, it's typically a good sign of something. So next, what I'm gonna do is draw out my POI, and at this point, it's just a waiting game. We're gonna wait until we get closer to our zone, whether that be the buy area or the sell area. But this is what trading is. You're gonna mark out levels, and then you're gonna wait for those levels to be touched and react on what you know how to do. Actually, let me fast forward on a higher time frame to kind of speed things up. Okay, so as we get closer to our trading time, what you want to do is go to a lower time frame and kind of just wait for the market to play out, do what it does. So again, this is our pro key level. This is where we want the reaction from. And this is our obstacle. This is where we want to see a struggling area or area for retracement, or it might just go through. You never really know. So as we're waiting, so now we are in our pro key level. Now there's two ways you can approach this. The very first way is to just put your entry here. You can put your stop loss at the low, your take profit at the high. But doing this will only get you a 1 to 2.7, maybe 1 to 3, which is fine. You can take it. There's nothing wrong with it. But the way I like to trade is I like to take safe A plus setup. So I'd rather miss a trade and not take the trade, knowing that whenever I don't miss a trade and it is a good trade, my risk reward will be very high. So when you're trying to do that, all you're going to do is go down to a lower time frame and find a T1 for entry. The same thing that we do to find these ranges, we're going to do the same thing on a lower time frame because the market repeats itself on every time frame. It's just about perspectives. What we're going to look for is we want to see the market come up a little bit, run out that liquidity. Remember, the ran out liquidity is key. Then break structure again, come down for a pullback, break structure a second time. Whenever that pullback happens, we understand that this becomes our T1, our trap. And then what we're expecting is for that T1 to be taken out, this low to be held, and then for us to continue in our desired direction. We're just waiting and waiting and waiting till we see something. Right now, it's not clear. Don't hop in because you're scared you're going to miss the trade. Boom. So we just ran out liquidity. We see that spike down, and this is what we consider our ran out liquidity. Now, all we're going to be waiting for is a break of structure above these highs. Those are the highs that started the run out liquidity. So once those break, then we can go to step 2, looking for that mob T1. Boom. So we have that break of structure here. Perfect. Now, this is where trading becomes a waiting game. You're waiting for that T1, and whenever we have that T1, you mark it out. Then you're able to kind of decide how you're going to place this trade. Boom. Perfect. So our T1 will be right here. This would be that first kind of pullback that you'll see after we broke that structure. And if you go to your line chart, this also helps. You'll see that there's a break of structure. It's actually like a little pullback right here, but it's amazing how everything kind of lines up, and I can't explain it, but I see why you can have multiple different strategies and all be successful. My goal is just to teach you the overall basics of how the market is moving. So now that we have our T1, what we're going to do next is go to our higher time frame and find a reason to enter the trade. So I'm on my 5-minute time frame, and the first thing I can see is we have this unmitigated wick right here. So we're going to put an entry line right there. Let's see if we see anything else, anything better. It's about the best I see. So now that we have our level below our T1, we're going to put an entry right here. Now, remember this, we're on the 1 minute now, but we originally saw all this on the 15 minutes. So with that being said, we're actually able to swing or take profit all the way to the top of the range. Move this down here. And this is honestly like one candle. So you can refine this because you see this gap in the wicks. You can honestly refine this to like this area. You might miss the trade. Always know that when you refine, but it can really be the difference in the risk to reward ratio. So let's put it right there. And then we can move this down to here. Cool. So lastly, all we would be doing at this point is waiting for our T1 to be tapped into. Once our T1 is tapped into, then we can begin to place our trade and see what happens. And when the market is doing things like this, a lot of times you're going to feel you missed the trade. And if you miss the trade, guess what? You missed the trade. There's nothing you can do about it. But what you can do is be disciplined and not chase the trade. Because even if your strategy doesn't work that day, it doesn't mean it won't work tomorrow or the next day. So always keep that in mind before placing a trade, feeling the fear of FOMO. So as you can see, we tapped into the area perfectly. Now at this point, all you're doing is waiting for the market to do what it wants to do, and you have no control over the results. And as you can see, the take profit was hit at that high. You also notice that at our obstacle right here, we did struggle and we did start to have some type of pullback. But the reason why you love these obstacles is because they let you know whenever you're in areas that you are struggling in, you can expect this. You don't have to say, "Ooh, will it reverse? I don't know. It's acting weird." It's not acting weird. It's going through an obstacle, and it's your decision to say, "Is this an obstacle I want to hold or not?" Based off the structure you find. Now, total, you could have caught this from, you would have caught this from down here. You would have had about a 1 to 14.5. Now, realistically, you're not probably going to hold all the way to the very top and execute just like this. What is realistic is, this external right here that we originally aimed for, which was about a 1 to 7.5, or you could have went from the pro key level to the obstacle, and that one would have been about a 1 for 11. So regardless, if you risked $100 and you hit the 1 for 11, $100 into 1100, or if you risked $1,000 into 11,000, however you want to put it. But yeah, I like to keep things short and simple. I just really want to help the next trader who might not have the access to the information that I was able to gather. Literally, this was the difference between me being profitable and not having this kind of information. Back when I was just learning support resistance, order blocks, supply demand, things like that, I was making money, but this is what made me make money times 10. And I would love to have content to where people are like, yeah, I got rich off of watching these YouTube videos. Now, that sounds cool to me. I don't know. Yeah, man, if you guys are liking these videos, keep commenting on them. This is honestly the reason why I keep making videos daily at this point, because I'm constantly getting new comments, new subs, and people are messaging me on the side saying, hey, like, it's really helping, keep it up. I appreciate it. That's really why I'm doing this. But guys, I believe we're at like 96 subscribers. We need 4 more subscribers for us to do the free one-on-ones. Whenever we hit 100 subs, we will have 5 people out of those 100 have free one-on-ones where I'll teach them exactly what I do, how I do it, why I do it. So you want a chance to be one of the lucky ones with a free one-on-one. All you have to do is be subbed up, of course. You know, that's what keeps me going. Second, I need you to see you following my Instagram and TikTok page. I'll put all this in the description below. That way you don't have to look and search and do all these other things. Lastly, I need you to find 3 of your favorite videos or 3 of your least favorite videos that I have on YouTube currently, and tell me why you like it. Tell me what you don't like about it. Tell me if it's helping you. Tell me if it's not helping you. I need your feedback. I need your thoughts, because the way my videos are going to get better is by understanding what is needed and also understanding what you guys do like. You know, I don't want to just keep changing things. If there's things that you like that you want me to keep doing, let's do that. But yeah, man, once you have all that done, send me a screenshot on Instagram. That way I'm able to put your name in the drawing for the lucky 5 free one-on-ones. We almost at 100. I think after this video, we're going to announce winners on Instagram. So you guys get your comments in, get your likes in, do all those things. And hopefully I can help you on getting to the next level in your trading journey. But yeah, man, that's everything I have for you guys today. Again, I like to keep things short and simple because I know people got things to do. But y'all guys be cool. Y'all be safe. Y'all be calm. I'm going to catch y'all on the next one.